Is the investor love too concentrated?
Oh, look, absolutely it is. But it's like any love. While it's requited, it's fantastic. It's the best thing in the world. And so all the while these 7 stocks keep going up, it's magnificent. But when they turn, and they will get over expensive. And when the markets turn, they will be the first things that people sell, A, because the valuations are so stretched, and B, because it's the thing that everybody owns. When markets turn, people sell the things that they've got profits in to cover the losses elsewhere. So the downside of this will be, just as vicious as the upside has been when that day comes. But for now, everyone figures they can get off at the last stop before the terminus, and I wish everybody well. I hope they all get off in time.
When they pile all into gold or gold?
Well, we'll see. I mean, we'll see. They take more convincing to do that than they do to buy like a sexy tech stock or an AI related company. Talk about gold, and it takes a lot more to convince people that this is the next thing.
Hello and welcome to Crypto Street, where we bring you the latest and most intriguing stories. Now, let's begin our enlightening discussion with Grant Williams.
Well, let's think about that. When we talk about what gold's done, what people tend to refer to as the price. That's all they care about is the price. But you look at what's happened with gold, look at the fact that central banks bought more gold last year than they have since 1950, 1,136 tons I think they bought. We've seen stronger hands taking possession of physical gold. The price hasn't gone crazy, which for me is perfect. I don't worry about the price. I want to own gold. People think about gold like they think about other assets in terms of, should I buy gold? I think, should you own gold? And it's a very different mindset. Once you're an owner of something, you view it very differently to something, oh yeah, I'm going to buy gold. That implies it's a trade. That implies I'm going to buy gold and I'm going to sell it when the price goes up. I want to own it. And at some point in time, I'll either need it, in which case, if the world has reached the point where I need my gold, I promise you the price is going to be a lot higher than it is now. It's not going to be a nice place to be. But if I don't need it, it's going to keep up with inflation. It's going to, over time, it's not going to cost me any money. It's never going to go to zero. And I'm much more comfortable like that, particularly in a world where I think it's time to play defense. There's no mania like a gold mania. You think tech stocks are crazy? Wait till you see what happens when people decide that gold stocks are a thing they must have, because they don't have the bandwidth to take that kind of capital without some really crazy price moves. And when that happens, gold fever it's very real, right? There's something about gold that when people decide gold is where I want to be, they'll trample over their grandmothers to get to it. And so you'll see this stuff happen. And when that happens, the executives will do dumb things. They'll pay over the top for other companies. They want to acquire assets. They do all the things they've done before, and they'll screw it up. And that's generally when the bull market tends to end. So you have to go through that cycle. But I'm much happier having that in front of me, because it means we've got to get there first. Look, the world is an incredibly complicated and increasingly complex place. And so there are so many things happening right now. Big cross currents, big geopolitical cross currents, financial cross currents. It's really difficult to find a place in the financial ecosystem that's like calm and centered, and you can actually make some sensible decisions about long-term capital, except to me commodities, right? Commodities is just about the one place where you can put capital to work, knowing that the sort of life cycles and investment cycles that the commodity market throws up make sense in a world where there are many, many shifts that are going to happen on every level of the financial markets that will kick you off or throw you out or pull you back in. And so for me, I'm more interested and more excited about commodity markets now than I have been in quite some considerable time. If you look at what's happened, as everything's become increasingly financialized over the last 30 plus years, all people care about are stocks, right? We want Netflix, we want Amazon, we want stocks that go up, and we don't really care about the companies. All we want are things that go up. Commodities require a lot more time, unless you're going to day trade gold futures, which I wouldn't advise to anyone listening at home. But commodities are the kind of asset that you invest over a long time horizon, and people's investment time horizons have become increasingly shorter over the last 30 years. So it makes perfect sense to me that no one cares about commodities, but at some point they will, and there's no bull market like commodity bull market. I mean, they're awesome to watch. They really are. What was the old George Bush quote? Fool me once, shame on you. Fool me, you can't get fooled again. It's the whole, you cannot take a risk now that the Americans will be as good as their word in terms of, no, well, we confiscated Russia's assets, but yours are fine. because who knows, right? You just don't know, particularly with how turbulent the world is. You don't know whose side you're going to be on. You don't know where the sides are going to be, where the lines are going to be on the map. You just don't know. And so this is not like taking a flyer on a uranium company and putting some money to work thinking it might be a 10-bagger. This is your national security interest. So this is not an option anymore for people, but to find a plan B, if you like. You have to think through, what does a recession mean for my portfolio? Now, if you look at markets don't seem to care about the likelihood of recession. Now, that inverted yield curve in years gone by would have made a massive difference to equity markets. It hasn't. People are looking past that. And to me, that tells me that people believe that even if there is a recession, the central banks will cut rates. They're at 5% now. We'll be able to cut them down and everything will be fine. I don't think that's I think people have forgotten what a real recession looks like. Now, the last one was really '08, and that wasn't so much a recession as a financial crisis. Go back to 2001, though, and look at what happened in that recession. It was a short, reasonably mild recession, and a different picture emerges of, higher unemployment and equity multiples getting cut, earnings getting battered. I mean, it's a very problematic time to be in the equity markets, particularly at valuations like this.
Don't forget to join us as we continue to explore the unfolding events. Now let's look at the latest news. Then we turn back to Grant Williams. MicroStrategy's stock, NASDAQ MSTR, has risen 206% after the company adopted Bitcoin as its primary treasury reserve asset. The business intelligence firm now holds 152,800 Bitcoins, acquired for a total cost of $4.53 billion, and it has plans to buy even more. The SEC has postponed its decision on the ARK Invest and 21 shares Bitcoin ETF proposal as it's soliciting feedback from the public. What's happening in the crypto market? Let's take a quick look at those technical analysis. Bitcoin continues to frustrate investors with its tight range consolidation, giving no clue about the possible direction of a breakout. Typically, the longer the range, the stronger the eventual breakout from it. Therefore, traders should be on their toes to latch on to the breakout when it happens. A minor positive in favor of the bulls is that they are holding on to a large part of the gains seen in 2023. That indicates a lack of urgency among the bulls to book profits, as they anticipate the uptrend to resume. Bloomberg Senior Exchange Traded Fund, ETF analyst Eric Balchunas, highlighted that 15 of the best-performing equity ETFs in 2023 have been crypto-related, with exposure to crypto and blockchain. Do Bitcoin and the select altcoins show any signs of a potential breakout from their respective ranges? Let's study the charts of the top 10 cryptocurrencies to find out. That wraps up today's crypto news highlights. Stay tuned for more updates, insights, and analysis from the world of cryptocurrencies. Please share your thoughts in the comments below. Don't forget to like this video and subscribe to our channel for more engaging content.